What's up YouTube, it's Todd Horst here with Tasty Tracker, and today I have another small account challenge update. Today I wanted to start off with SPY. This is the weekly view, and I just wanted to go over the flattening of these increases. So during the COVID crash here, we can see we have a pretty steep recovery, then it's less steep, and then it's less steep until we get to a point where we're at today, where it's actually more in line with what we had as the upper band all throughout 2019. So we can see 2019 starts here, and then we have a pretty consistent growth. There's a little bit of room for this. There's a gap down here, and then it peaks above it here. I would argue that the end of 2019, early 2020. Sorry, dogs. End of 2019, early 2020 was due for a pullback anyway. So you might adjust this line down a little bit. I'm not sure, but the whole point is where we're at now, and the kind of increase we're seeing is more sustainable. It's more reminiscent of what we had been doing prior to COVID. So I see that as a good thing. One thing I would point out here is the SMAs here are tighter. They're still in the right order over here, which is nice, but it is nice to have a little bit tighter so that way there's increased support, we'll say. So at this point, if you drop below the 20, then there's more room to fall. Back in here, if you drop below the 20, it very quickly hit the 50 and then bounced back up. So, over the course of the remaining of this year, I would hope that we sort of level out, maybe even less steep than this increase, but that it would be continuing to go up and that the SMAs would go in order. That's obviously my hope and desire. We'll see how it pans out. So if we go to the daily chart, I can zoom in here a little bit. I've had this green line here that was resistance up here. We quickly peaked above that, but then came right back down. And past couple days had been closing above the green line, but we're making lower highs, and that was concerning to me. I wasn't sure if we were going to get to a point where this would be another resistance, and then we would come back down here potentially to the 50. Luckily today we were up, and with decent green volume, RSI and MACD look good, volume looks good. So I'm not expecting it to shoot up, and I don't want it to shoot up from here, but it is nice to see it get out of that small downtrend that it had there. So if we hop over to the account, I keep this chart up because it's easier for me to see just the overarching theme of the day, whether it's going up, down, or lots of dips, etc. It's a little bit harder for me to read that on the 5-minute chart. I'm gonna have to reset this. It's not insanely difficult, obviously, but I just like the simplicity of this chart for the daily view. So yeah, looking nice, and we are actually over 400 for the day. I thought we were high. Let's go to day. Yeah, there it's saying the high is 400, so I'm not sure why it's saying differently when I'm on the 5-minute view. Okay, so Robinhood, today we opened up a deer position. That's showing up as 26. I'm not sure. That may or may not be the case. And so today's return is 29 on AMGN. Overall is 34. So I did close out of all of the other positions. They were all alerted to Twitter and Tasty Tracker if you need to see them. But all for a loss. qcom did come up a bit, so if you stayed in that position, you were rewarded. It's been coming up the past 2 days. Maybe I could have held on to that. But I sort of was needing to wipe the slate clean. So anyway, if we go into deer, we can see I sold the 362, bought 357s, and therefore expiration down here. Yeah, that took me to the strike. Sorry, the 514 expiration. I had to come in. instead of doing the monthly because they weren't $5 wides, and I can't put a $10 wide on this account. That would be too big. So if we go back to Deer, we can see I put it on in this range when we were down here. So it is bounced back pretty nicely. Let's go ahead and look at a more complete chart here. So we can see it's had a great trend. I tweeted about this yesterday. MACD and RSI look great. When MACD is up this high, you can frequently get a nice burst up increase. So right here, if you look at where this uptrend started, the MACD, or the RSI, I'm sorry, was already pretty extended by some people's definition, but you get this nice shoot up in RSI and this nice shoot up in the price. Obviously it gave some of that back, but the overall trend here has been great. Yeah, so we're putting on a bullish position that, somewhere out in this range, it will continue its trajectory. The spreads were a little bit worse. So first of all, this one's a $5 wide, but I couldn't go out as far as what I would like to dollar wise. It's still percentage in the money far out, but not dollar wise. So right now it has to stay above 362, and that puts us, right in there, which is not a lot of wiggle room. It is below the 20-day, which is right now 367. So there's at least that support, but I'm comforted by the fact that to me it looks like it could turn up here, or at least continue on the path that it's on. So yeah, I have that entered into Tasty Tracker here, collected 176, which means I'm risking 324. I want to exit for around $88, so you can go ahead and put your closing order to buy back the spread at 88. That is what I'll be shooting for at this point in time. And I think that's all I have to talk about today. If you have any questions, let me know. Thanks.